Man, did you pick a good day to come to YouTube. Today's clip that you're about to see and hear, we had a caller into the Haven Lifeline who was just poking the bear. He was just trying to get OG to become the monster that we all know he can be, with a question that is just gonna light a fire right up underneath OG, and let's see if he can snap. Don't forget to subscribe. You gotta like it so a bunch of other people get to see this scary goodness, and then hit the bell to remind you when the next videos are coming out. All right, let's listen in, because this is one of the great Haven Lifeline calls.
Let's say hi to Mark, because we love Mark. Hey, Mark.
Hey guys, it's Mark in Chicago. I just wanted to call Joe, OG, and what's his face to run a target date fund strategy by OG to see if I can convince him that this is well thought out. So I know one of your critiques is that target date funds are too conservative, too early. So what if I push my fund date out 10 or 15 years past my retirement date to stay in equities longer? Also, I know that target date funds are too heavily weighted in large and growth. So what if I added like 20% small cap value? And finally, I know you need that last double, and that's a big concern. So what if in 10 years, I ladder a second target date fund again to stay in equities longer to try to grab that last double? Wondering your thoughts on this, and boy, please dig deep in that t-shirt pile, see if you have any 3X. Thanks, men.
Oh, God. Oh, God.
The ground is shaking because he's taking these big, giant monster steps towards the microphone.
So let me just make sure I heard what he said. I want to buy a target date fund, then buy all the stuff that I should have bought outside of the target date fund, then change the target date fund so that it's not really a target date fund anymore. It's just a fund that's got a different date on it. Then right before I need my fund, I'm going to buy a different target date fund. Is that what I heard?
Yeah. I mean, it makes total sense.
Yeah, works. Do it. Sounds amazing. I mean, for all that work, why don't you just take it apart? And
that was my thought.
And just do it the way you want to do it.
Oh, gee, I'm like, it's not that it won't work. It's like, if you're going through all that trouble, why don't you just do it the right way?
Yeah.
Because I feel like the right way, it's less work than buying the target date fund.
There's a great piece that Paul Merriman puts out every single year, sometime around the beginning of the year, and you can look it up. And I'm sure Kevin can find it and put it on the newsletter. But basically, he updates his 3-fund portfolio, right? Which is a very simple way to invest over 50 years. And then updates the data and says, like, okay, if you would have had this 3-fund portfolio, rebalanced it annually, started with 100K in 1970, and today it would be worth this. But if you would just take, instead of having these funds, you would add just this little bit of international, then it would be this. But if you would just add a little bit of small cap, it would be this. But if you added just a little bit of emerging market, it would be this. But if you added a little bit of large cap value, companies have been around a long time, it would be worth this. And he goes through this exercise. So it changes this 3-fund portfolio to, 8 or 9, 10-fund portfolio, but not a lot. And the difference in the portfolio, I'm going to butcher the numbers because I don't remember off the top of my head, but it's something like $10 million or $22 million. It's a profound difference by adding those areas, those other asset classes that have higher expected returns over long periods of time. And the thing about investing is that it never works out in the manner in which you want it to work out. It never is the exact timing. We're big believers in academic and science around investing. And I hear people all the time say, I had a client email me this and say, I don't think we're invested enough in AI. And I said, what are you talking about? You have 14,000 different stocks in your portfolio spread across these 9 positions. I assure you there's AI stocks. Oh, well, we should probably overweight it because, this is the new thing. And I'm thinking to myself, well, this is what people were arguing about in 2000 and in 1990 and 1980 and 1970. Like, there's always the new thing. And by investing in diversified ETFs, diversified mutual funds, you're already capturing all of that stuff in a manner that is commensurate with their output relative to the global economy, right?
You've already got Microsoft, you've already got Google, who have monster AI programs.
Otherwise, you're just guessing, right? You're intervening. You're putting your emotion.
Yeah.
See what I did there?
Yes.
You're putting your personal feelings in the way of the investing process. No different than anybody who says, "Oh, the market's down, I should take some money out." That's that's the same. It's the same sin, just a different. See, I got that church emotion. I'm tying it all together. I don't know if you guys are keeping notes.
Just amazing.
But my point is that it's the same. It's the same argument. It's just a different thing. It's like, well, no, I think this. Well, I read online that why should the world care that your little echo chamber of AI people think this? The reality is that if it's an investment in an industry or a sector, whatever you want to call it, that is productive, capital will find its way there automatically. And by being diversified, by owning an S&P fund, by owning a small cap fund, by owning these things, you will partake in that growth merely by investing in those big, broad asset classes. And so I don't understand why you would purposefully try to take money off the table when it's not that much more difficult to add those extra layers in there, like Merriman says, every year. So listen, target date funds are fine. It will get you where you probably want to go. And if all of your energy is committed elsewhere and you go, I have to invest some money, I don't know where to put it, I don't have the time or energy to pick something, pick the longest date target date fund you can find and put all your money into it. But the solution to your long-term plans is not going to be, I picked this target date fund or that, or I diversified this or that. It's not going to be those things. It's always going to be, did I save enough money? So we're talking about the top of the pyramid here, that sort of stuff.
Mark,
it's okay.
Mark, I'm very glad you called, because your question, this is why we send people T-shirts when they call. Mark's question, Mark's not alone here, OG. I mean, this is what
there's 17,000 other people.
So many people thinking, question. Mark, exactly what
Thankfully, 17,000 people don't, because that would be a lot of T-shirts.
I'm so happy you called, because this is a monster problem. And it's why, frankly, we had Dr. DeGangi on today, is because it's such a problem. It's such a thing for people. And I think where you are, man, I feel like you're far enough along this route. If you're thinking that critically about your investments, then I think using something like the Efficient Frontier or more scientific portfolio is exactly where you want to go. So no need to layer products that aren't meant for that, and to second guess the target date fund people by putting, to use OG's terms, target date fund on top of target date fund. I think there's a much easier route that's going to be also more gratifying. So great stuff. Thanks for that question. If you've got a question for us, StackyBenjamins.com/voicemail, and we'll send you a Haven Lifeline Stacky Benjamin's Greatest Money Show on Earth t-shirt for calling in with a question that everybody else has. So many people have that question.
Hey, Stackers, neighbor Doug back here again. Hopefully you'd settle down after that terrifying Haven Lifeline call, but it was a great clip. It's actually a pretty good question, and I love the way that OG approached it. So another great segment from the show. Make sure you go check out Stacking Benjamins on your favorite podcasting device. Listen to the whole thing, but these short clips, they're pretty darn good too, aren't they? So thanks for joining us. Subscribe, like, hit the reminder bell. See ya!